Good week, Mickey. Jobs report came back stronger than anticipated, and the unemployment rate's down, and Apple crushed it in the earnings. So looks like everything's going along at a pretty good clip.
Yeah, the economy is looking good. Earnings season is pretty much ended in a high note. There's a few stragglers that are left, but things look good. The market's continuing its upward climb, which is, why we keep saying you don't fight the trend and you don't try to outguess the market.
So I guess that means we really don't expect much more in terms of news announcements or changes this month. So is this when as you said, the traders all go to the Hamptons?
Yes, we're pretty much done for the summer. Now we get into these last few weeks of August, even though it's the beginning of August. But we'll start seeing a slowdown in volume. We'll probably see a little volatility here and there, but I don't really see much change in the market direction unless we get some sort of economic news that is completely unexpected or political news that's completely unexpected.
So this might be a good time for investors to sort of take a breath, not have to watch the market on a daily basis unless there's something big, and sort of take stock as to where they're going. When you get a new client coming in wanting to talk about investment strategies, what are the kind of questions you might ask them to figure out what their goals and objectives are?
Well, one of the things is obviously your age. When you look at how old you are and where you want to be, are we looking at a retirement account? Are we looking at are we saving for a house? When you come to a market like this, it's been on this massive bull run for 9 years. It makes it hard as an investment advisor to put someone in and, if you're young and say, hey, we're going to go aggressive, when we know that at some point this market run is going to end. They always end. The economy's strong, everything looks great, which is when things start to turn at some point. And the market prices things in, 12 to 18 months ahead of time. So the market will turn before the economy turns. So when I get new investors, especially as we're going forward, it's kind of that conversation of, let's look at your goals, let's look at your age, and maybe we dial back some of the risks because we have to think about the future of a pullback at some point. And we're willing to give up some upside here in the short term for the long-term pullback because we know this won't go on forever. I wish it would. That'd be the greatest thing of all time. But I remember back in late 99 when people were saying the NASDAQ's going to go on forever. Look at these great internet companies. They're fantastic, and we saw what happened.
No, fair enough. But I guess sort of looking at all the potential against their goals can be a little overwhelming. How do you sort of dissect that for clientele to sort of get them to a point where they're comfortable in taking an action?
That's the hard part because people don't see the forest through the trees a lot of times. They just see the market going up, and you really have to talk to them and explain to them how the allocation and diversification process works and explain that, the market is not a true indicator of their portfolio. You can't compare your portfolio to the S&P 500 because that's 500 stocks. So your portfolio is going to be made up of bonds and stocks, and how we're looking at controlling the downside more than the upside. It's great when the market's going up, your portfolio will go up. But when the market sells off, you don't want to sell off as much as 500 stocks like the S&P 500 or 30 stocks as Dow Jones. You want to sell off less, and that's why you have a diversified portfolio. And that's where the financial advisor like myself, where we really, really earn our keep by helping our clients understand how their portfolio works and how we can temper their expectations and teach them about their portfolio and how we help them in down markets, because that's really where we earn our money and we help our clients.
And it might behoove somebody to start talking to you that now, not to change anything because we've got an up market with a strong economy, but sort of planning for when that happens and how they can still achieve their goals. So Mickey, for those who may have some breathing room now in August with nothing really expected to happen, how should they get a hold of you?
They can email me directly, Mickey, Mickey, at Investum, ENVESTIM.com. Follow us on Facebook, our Investum page, and follow us on Twitter at Investum1.
Enjoy the week, Mickey. We'll talk next week.
Thank you, David. Look forward to it.